Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel L. Connon, along with Dennis Dick, and we have a very special guest on this morning. It's Gene Munster, Senior Research Analyst for Piper Jaffray. Busy day for you, Gene. How you doing?
Doing well. Yep, this is fun, and this is one of the great parts of the job. It days like today.
You know, I was thinking about that. I'm glad we're having Gene on a down day and at least in the stock here. So let's just go right to it. Do you agree with the pundits that Apple catalysts are a bit stale here?
We don't. We're in the camp that there's some measurable and meaningful catalysts over the next 6 to 12 months that is going to lead to multiple expansion. And I think one of the most important points is that the core business, the core iPhone business, continues to be healthy. And I think there was expectations that they were going to guide the iPhone number for March somewhere in the 48 to 50 million number. And in fact, they guided to 53 million. So that was better than some of those dire expectations. And I think that's a sign that this is a strong fundamental story. But obviously, they had a lot of negative commentary about the macro that's really spooked investors about what's going to happen in the June quarter.
Gene, the big question I think everyone always asks about Apple is, what are they going to do with this massive cash that they have? What are they going to do? Do you think that they raise the dividend again? Do they increase the buyback? Or are they cooking something else there for this cash?
They can do both. And in terms of the buyback, as the CFO mentioned, that they're going to revisit the buyback when they report the March quarter, which is code for they're likely going to increase it. We haven't come out and said what to expect with that increased dividend, but one thing is that they're going to have about $50 billion in free cash flow, and so maybe that's kind of just a high-level starting point of how to think about it. But again, they're not going to allocate all of that to some sort of a buyback. But that's one part to it. But even when you factor that in, they still have about X debt, about $150 billion in cash, and the stuff that they could do with that obviously is invest in tooling for their supply chain, which makes it faster and more efficient to build some of their phones. But also they could be tooling for other big categories longer term, which we've talked a lot about, the automotive side and potential in that segment. So those are kind of some of the high-level things that they could do.
All right, as far as like the automotive goes, we've heard, rumors about Tesla. I mean, they basically could buy Tesla with like the cash that they have in the register at one of their stores. I mean, do you think that they're interested in the company as a whole, or more, perhaps some of the engineers and the people that are working at the company?
I think there's something in the company as a whole, and specifically around their patents in batteries. And that's probably the substance of what Tesla has is two things. One is their patents and also their people. So this way they get at both. The one challenge that they have is that Elon Musk loves cars, and it's just unlikely that he's going to sell. And so what does this mean if you're Tim Cook? How do you approach that? Is you may not get your hands on the patents if they're unable to buy Tesla, but you may get your hands on their R&D team. And if you look, Apple's R&D spending is growing rapidly. And the December quarter was up 27% year over year, and revenue was up 2%. Typically, Apple's R&D increases track revenue. So there's been a separation there. And I think that's one way that they could kind of approach this market without having to buy Tesla. So I think all options are on the table.
Okay, moving on just here, Apple TV is just kind of faded into the background here, and I think one big reason for that is because, if they're going to do something to really make that a big performer, they need content. And a couple years ago, I got a wild idea, and I gave it to Dennis, and he confirmed with it. If they need content and they want to make a big splash in this, I mean, once again, CBS, a market cap of $23 billion. I mean, that would be 1/10 of the cash that they have. You see any possibility of them trying to capitalize on Apple TV by making a big acquisition like that?
I think it's a little bit less likely, and part of the reason is that in the content space, whether it's music or movies or TV shows, It's about a wide range. Consumers don't think about CBS properties, or they're starting to think a little bit about Netflix and made on Netflix, but in general, they just want to know what's hot and want to be able to watch it. And so to have a really compelling offering would require them to buy a lot of content, different content companies. In other words, they need to really forge these relationships without the strength of their balance sheet to make that happen and give consumers what they ultimately want, which is total a la carte choice about the content that they get.
Gene, we can make, speculation on possible acquisition targets for this cash, but it's never really been Apple's style to go and buy another company, has it? Like, have they ever really done any major acquisitions like that? They're more innovative where they like to do it themselves. I just don't see it because I just don't believe it's their style. What do you think about that?
It isn't their style. The biggest one that they've done is Beats. The reason why that it's even a notable topic and worth discussing, even though it hasn't been their style, they're faced with some just different challenges today than they were 5 years ago. And specifically is that in order to grow a $270 billion business, you have to find big markets to go after, and they may require more money to get into. So I think that one aspect that's impressive about Tim Cook is his willingness to do things that have not been their historical style. And he's said all along that they are open to larger acquisitions.
We're on the line with Gene Munster. He's the senior research analyst for Piper Jaffray, discussing Apple's earnings report. Gene, going back to diversifying their products, you also have mentioned virtual reality. I mean, is there any public or private companies that Apple may be interested in? And just expand on what you mean by virtual reality for Apple.
The question came up on the call yesterday, and Tim Cook really didn't take the bait. It was his gauging his interest in the category, and he said that there are a lot of applications around virtual reality. Virtual reality is when you have a headset on that blocks off the real world, and you get this kind of immersive world. It's a smaller opportunity, but a forerunner to the bigger theme, which is going to be over the next 10 and 20 years, which is mixed reality. And this is the part that Apple needs to have a plan. And specifically, is mixed reality is when the screen as we know it goes away, whether it's our phone, TV, desktop, and we start to have wearables that are more responsive and you get more information more quickly. And that is important for Apple because they have the largest screen business today with the iPhone, essentially. And so it's going to be critical that they make progress. And they've made hires. They've done a couple small acquisitions in the space. But I think if you fast forward, this is beyond trading over the next year. But if you just think about what's important to Apple over the next decade, this whole concept of mixed reality and to a lesser extent virtual reality is an area that you're going to see progressively more M&A in, but lots of probably little stuff.
How about the watch? Was it a flop? How has it performed? Do you see it improving?
It's struggling, and they did about 4.7 million units. They don't actually break out the number, but you can back into it. For December, we're looking for 6 million. The street is at 5.5. And in general, it's still a really small part of their business. It's about 2% of their overall business. It's going to grow around 80% in 2016, and we think in 2017 it can have a breakout year. One of the big features that can give us some optimism that the watch is still a good business for them is eventually, and it's hard to predict when this is going to be, but they're going to decouple the watch from the iPhone. So right now you need the iPhone to use your watch, but eventually you're just going to be able to use the watch as a standalone. And not that that's going to be your primary device, but it will allow you to not have to always have your phone with you, and we think that that would be an important feature. So the one-liner is it's been a disappointment, but there's still reason for optimism.
Okay, just moving on here, as far as regions go, sales in China accounted for 24% of total sales. They were up from the last quarter. I mean, do you think, they're going to continue their efforts in the all-important China region?
China's critical for them. They talked about the middle class going from 50 million to 500 million people on the call. They're going to double the number of stores they have from 20 to 40. China is not doing well from a macro standpoint, and that's part of some of their concern. But I think that that's kind of an important growth driver longer term, and I don't think they're going to back off that.
Gene, let's jump into Amazon here for a second, because we know you cover Amazon as well. You still have an $800 price target on Amazon. What are your thoughts here first on the company? And then secondly, can you maybe jump into Amazon Prime a little bit as well?
So overall, we like this. We think that the growth in Prime is going to continue to be a catalyst for investors to get behind the story. Specifically, when they get Prime usage, a typical Prime user spends 3 to 4 times more than a non-Prime user, and they're just renewing customers. They just keep coming back. So the net of all that is it's positive for unit growth over the next couple of years, which I think gives investors some confidence. I think that that's specific about Prime. I would add that the biggest concern for investors is that Amazon's going to drift back into some aggressive investment cycle. And they've done this in the past. And if you look at, we've gone back and looked over the last 3 years, that they did invest more aggressively in 2014. The belief on the street is they were less aggressive in 2015. That's not true. They actually invested at a normal pace in 2015. In other words, is Amazon can keep pouring money into its business, keep investing in the business, and keep moving margins higher, which we think is a critical distinction and one of the reasons why we're optimistic about the stock.
And Prime, just how do you think that performed over the last quarter? And will it remain a good-sized part of the company's strategy over the near to medium term?
Our best guess is that they added somewhere between 9 and 10 million Prime users, which is about the same number that they added a year ago. They won't break the numbers out, but that doesn't sound exciting when you say it's flat year over year. But there's just a limited number of households who can get Prime, and they're probably approaching close to 60 million Prime households in the U.S. And so there's just they're getting to a point where everyone's getting Prime. I think that the importance of it is critical, as we mentioned, kind of the 3 to 4x spending patterns of Prime users. And then they're going to get into new categories like groceries and same hour, which is going to continue to expand the wallet share when you're part of Prime. And so it's an important part of the story.
Gene, moving on here, do you see Amazon competing with FedEx, UPS with the air cargo? I mean, who is shipping more packages out than Amazon? Saw an article about maybe a secret air cargo operation running in Ohio, and all signs point to Amazon could just be, a big problem for FedEx and UPS moving forward.
I think it's not going to be a problem for FedEx and UPS. That Amazon, it is true they're experimenting with different types of fulfillment. It could be large freight from air from China to something in shipping. But the real substance of what FedEx and UPS and more recently USP does for Amazon is that last mile. And they do about 20% of the volume, Amazon does, of those different carriers. And it is important that there's leverage. They basically capitalize on the leverage that these other players have. So the math just doesn't add up for Amazon to try to build this out themselves. They may use this as a stalking horse against UPS and FedEx, but most likely this is just them trying to find some more speedy way of getting important products into the U.S., and they'll still rely heavily on those other providers.
Gene, what do you think Amazon's next big innovation is? What's on the horizon that you're excited about?
The big thing is going to be same hour. And if you look at where they've been investing more recently, they've doubled the number of cities that offer same hour in the last 3 months. There's 26 cities now. A year ago, that was 1. It was just in Manhattan. And that might not sound that exciting, but one of the reasons why traditional retail exists is this instant gratification, be able to walk into a store and pick something up right now. But Amazon's going to slowly take that away, and I think that can dramatically change how people think about Amazon. It's going to take 5 years for people really to embrace that, but that's an exciting part of the story. And then separately is on the whole grocery side, which also is going to take a long time, but this idea of getting inexpensive, high-quality groceries to you, I think, is something that is going to be an exciting part of the story.
Gene, now before we let you go, I mean, you've given us a lot of bullish scenarios here for Apple. I know you look at the technicals, you look at the fundamentals. More importantly, I mean, what would make you change your rating on this stock or have less faith in the company to continue to innovate and move forward?
I think if their iPhone franchise was losing market share, that would make us concerned. And if you look at the guidance for the March quarter, that's down 13% unit growth, they're probably going to maintain their overall market share, global market share of smartphones. But if we saw a trend of them losing market share, and the way that would happen is if their innovation on the phone just wasn't keeping up and people were switching off. And that's something that we track closely, just intent to buy. But if that somehow changed, that would make us nervous about just the overall franchise.
We've been on the line with Gene Munster, Senior Research Analyst for Piper Jaffray. I want to give a quick shout out to Opie, Jimmy Spate, Danny Flanagan, some of the great people working at Piper. Thanks a lot, Gene. We'll talk to you again soon. Great information.
Thanks, everybody.
Thanks, Gene.